Okay, let's unpack this. Imagine having, well, a bit of a shortcut to smarter trading decisions, something to maybe boost your confidence and without spending a dime. Today, we're diving deep into exactly that. We're looking at two powerful, free TradingView indicators. And the idea is when you combine them, they can give you a real edge.
That's absolutely right. And the sources we looked at, they give a really brilliant step-by-step guide. So our deep dive today isn't just about what these tools are. We're focusing on the how and the why. Why these specific settings, how do they work together? So you can apply them like right away and get a clearer picture of market momentum.
Perfect. So let's get straight into it then. First step for you listening, head over to TradingView, click on Indicators, then search for Market Trend Levels Detector. Found it. Okay, add that one to your chart.
Right. Now, once that's loaded up, this next part's critical. You've got to tune its engine, so to speak.
Yeah.
Open up the settings, find the input tab, see the fast input, defaults 12, change that to 20. And then the slow input, change that from 25 to 32.
Ah, okay. So 20 and 32. Why those specific numbers?
Well, these adjustments, they help filter out some of the minor market noise, lets the indicator focus on the bigger, more sustained trend shifts. Keep the style settings as they are. The defaults are fine. Then just click OK.
And visually, what you get is actually pretty intuitive, right? It cuts through the noise. You'll see a green arrow pops up that's suggesting a potential buy, and a purple arrow suggests a sell.
Exactly. And there's more. You also get these clouds. A green cloud tells you the trend is generally bullish. A purple cloud points to a bearish trend.
So it gives you a really nice snapshot of the market's overall direction at a glance.
Precisely. And look, this first tool is good on its own, but the real magic, where we start confirming signals, building that conviction, that happens when we add the second layer.
Absolutely. Okay, so back to the indicator search bar again. This time, you're going to search for the Elliot wave oscillator. Go ahead and add that one too.
All right, for this Elliot wave oscillator, just a couple of really vital tweaks in the settings. Again, in the input tab, adjust responsiveness down to 1 and change the period to 45.
Okay, responsiveness 1, period 45. What's the thinking there?
Setting responsiveness to 1 makes it super quick to react, even to subtle shifts in momentum. That's crucial for getting in early. And the period of 45, that gives us a broader, sort of more reliable view of the market cycles. Style visuals, feel free to tweak those how you like, make it look good for you. But those input changes are key.
Got it. And once that's set up, what you'll see is a histogram, usually at the bottom. It's really straightforward. Green columns mean upward momentum, buyers are strong. Red columns mean downward momentum, sellers are in control.
And what's truly fascinating here, and this is the core of it, is how these two seemingly different tools work together. They create this powerful confirmation system. You're not just relying on one signal anymore. You're building a much stronger case for your trade. It helps cut down on those, false signals quite a bit.
Exactly. So let's nail down the precise combined strategy, how you actually make a trade with confidence using this. For a buy signal confirmation, you need 3 things lined up. Are you ready? First, a green cloud from the market trend levels detector. Second, green columns showing on the Elliott wave oscillator. And third, crucially, this needs to be confirmed by a bullish candle closing on your price chart. Closing higher than it opened.
Shows that buying strength right there.
Right. And for a sell signal confirmation, it's just the reverse. You're looking for that purple cloud from the trend levels detector. You want red columns on the Elliott wave oscillator. And confirmed by a bearish candle closing lower than it opened, showing that selling pressure.
And when those conditions align, then you consider placing your order. For a sell trade, your stop loss, that safety net, goes just above the purple line from the trend levels detector. For a buy trade, the stop loss goes just below the green line.
Yeah, that makes sense. And we saw some really compelling examples in the source material, didn't we? There was one on a 15-minute US 30 chart. A sell trade, everything lined up perfectly. Purple cloud, sell arrow, red oscillator bars, strong bearish candle. And that trade hit its 1.1.5 target beautifully.
It did. And there was a similar buy example shown too, with the green cloud, buy arrow, green oscillator, bullish candle also hitting its target.
The clarity you get when both indicators agree like that is pretty remarkable.
It really is. But, and this is vital, remember that risk management is absolutely key. Not every single trade will be a winner. That's just trading, right? No system is foolproof. Using these combined indicators doesn't eliminate risk. What it does do is significantly improve your potential accuracy. And importantly, your confidence in the decisions you make. It moves you away from just guessing or hoping.
So what does this all mean for you listening right now? Well, By combining these two free tools, the Market Trend Levels Detector and the Elliott Wave Oscillator, with those specific settings, you get a much more robust confirming system. It can genuinely help you trade smarter, with less guesswork and hopefully a lot more confidence.
Yeah, and maybe this raises a sort of broader question to think about. Beyond just trading,
Uh,
how does this principle apply elsewhere in your life? The idea of combining multiple distinct pieces of information,
Yeah.
different perspectives, to gain a clearer, more confident understanding. Where else could finding that kind of synergy give you an edge when making complex decisions or even just learning something new, something to ponder?